Tulip Mania, one of the most notorious economic bubbles in history, took place in the Netherlands during the early 17th century. The mania, which reached its peak in 1637, involved the speculative frenzy and subsequent collapse of tulip bulb prices. This extraordinary event gripped the entire country, affecting people from all walks of life. To understand the magnitude of this financial phenomenon, let's delve into the historical context and explore the factors that contributed to the rise and fall of tulip mania. To fully comprehend the origins of tulip mania, we must acknowledge the Dutch Golden Age. During this period, the Netherlands experienced a significant economic boom, establishing itself as a dominant player in global trade. Dutch merchants and explorers sailed the seas, expanding their overseas colonies and amassing vast wealth. As the Dutch Republic flourished, so did its financial markets, which became increasingly sophisticated. During the early 17th century, tulips emerged as a status symbol and a highly sought-after luxury item in Dutch society. Introduced to the Netherlands from the Ottoman Empire, tulips fascinated the population with their exotic beauty and vibrant colors. Gardens bloomed with tulips of all shades, captivating the imagination of the Dutch people. As the demand for tulips grew, so did their price, turning them into a symbol of wealth and prestige. Tulips possessed an intriguing attribute known as broken or flamed petals, which enhanced their allure. These unique patterns occurred due to a virus that affected the bulbs, creating mesmerizing streaks and flames of color. Particularly rare and desirable were the broken tulips, which exhibited intricate and stunning variations. The unpredictable nature of their appearance intensified the fascination and obsession with these flowers, feeding into the speculative frenzy to come. In the early 17th century, tulip bulbs were traded on various exchanges, including established marketplaces and taverns. Initially, the market operated smoothly, with prices reflecting the true value of the bulbs. However, as the popularity of tulips soared, investors began to trade bulbs that were not yet in possession. This practice, known as futures trading, allowed speculators to profit from the expected rise in tulip prices. The lure of quick wealth attracted individuals from all social classes, leading to an influx of new participants in the tulip trade. As the demand for tulips increased, so did their prices. The tulip market began to exhibit signs of a classic bubble, fueled by enthusiasm and rampant speculation. Buyers, hoping to sell their bulbs for a higher price, entered into contracts known as options. These options allowed investors to purchase tulips at a predetermined price on a future date, creating an illusion of scarcity. Tulip bulbs soon became a symbol of wealth and prosperity. Stories of individuals making fortunes overnight were widespread, attracting even more investors. As the price escalation continued, people from all levels of society took part, eager to jump on the bandwagon. The tulip mania reached its peak in early 1637, when tulip prices soared to unprecedented levels. It was during this time that tulips became a hot topic of conversation, with people discussing their investments and anticipated profits. The tremendous surge in tulip prices attracted the attention of wealthy investors, nobles, and even members of the clergy. Many individuals liquidated their assets to invest in the tulip market, further inflating the bubble. The psychological effect of this euphoria drove prices to unimaginable heights, and people began trading tulip bulbs as if they were a form of currency. However, in February 1637, hesitation began to creep into the market. Some investors attempted to sell their bulbs to secure their profits, causing a chain reaction of selling. Panic gripped the participants as prices plummeted rapidly. The fear of losing everything led to a mass sell-off, driving tulip prices back to their true value, or even below. The collapse of the tulip market marked the end of the mania, leaving many investors financially devastated. While some managed to salvage a portion of their investments, others faced ruin and destitution. Tulip mania had morphed into tulipomania, a cautionary tale of unchecked speculation and greed. The Dutch government attempted to intervene, nullifying contracts and banning futures trading of tulip bulbs, but the damage had already been done. In the aftermath of Tulip Mania, the Netherlands experienced a period of economic decline. Trust in financial markets was shattered, and the country's reputation suffered. However, the Dutch economy eventually bounced back, learning valuable lessons from the tulip frenzy. The event served as a testament to the dangers of speculative bubbles and the importance of regulating financial markets. Tulip Mania remains a captivating episode in history, showcasing the power of human psychology and the allure of quick wealth. It serves as a reminder that even the most rational and level-headed individuals can succumb to the temptations of speculation. Today, Tulip Mania continues to be studied and analyzed by economists as a cautionary tale, an example of how exuberance and irrationality can lead to disastrous consequences in the financial world.